Good morning. Let the record show that we have a quorum present. And today we're looking at the 3 years, continuing to look at the 3 years annual reports for 2017, 2018, and 2019 for the Cayman Turtle Conservation and Education Center. And our first witness this morning is Miss Peggy Hamilton. And I'll invite the Deputy Sergeant to bring her in.
I swear by Almighty God that the evidence I shall give to this honorable legislative assembly shall be the truth, the whole truth, and nothing but the truth.
Good morning, Ms. Hamilton, and I want to thank you for finding the time to come back for our continued public hearings on the Cayman Islands Turtle Conservation Education Center. And as you would be aware, we're dealing with the 2017, 2018, and 2019 accounts. And the rules are that when you answer the first question, you just state your full name and title for the record. I guess I will lead off since I have all the easy questions. The minutes of the board for the 20th of February 2019 indicate that a request from the auditors KPMG for you to review all expenditures for 2017 to 2019 over $250,000 and determine why management did not see them as suspect. Did you complete that review, and what were your findings?
Thank you. My name is Peggy Hamilton. I'm the Chief Operating Officer at the Cayman Turtle Conservation and Education Center Limited. Thank you for the question. Yes, I did complete that exercise, and that was in conjunction with the purchase irregularities. And that took quite a bit of time to go back, and I actually went back to 2014.
Were you able to determine why the management did not regard the transaction over $250,000 as suspect at the time?
I was working in conjunction with the Anti-Corruption Commission because they are the ones who ultimately charged this individual, and the trial is starting in January. So I can't elaborate too much on it, but I can say that I worked very closely with them, and there were various factors. So the rest I really can't comment on much more than that.
Thank you. Can I draw your attention to the 2019 accounts and the note 19 for 2018 and 2019, which is on page 33 and 34 of the 2019 report and account? We have two divisions at the top, or we have a number of divisions at the top, but I just want for you to explain what is covered in the retail operations, what section of the operations are accounted for under that, and what is under farm operations.
Thank you. What is covered under retail is retail and F&B, as well as admissions and tours. And what is covered under farm operations is the turtle meat sales and all of the costs associated with it.
So the cost associated with the retail operations is what I would call, what was called the Turtle Center. The new development is all inclusive, and the new development at the thing, and the farm operations is the raising of turtle, production of turtle meat, sales of turtle meat.
Correct, along with, as you go over to the right, the admin, the research expenses.
Yeah, but the research stuff is accounted for differently.
Correct.
So any research related to the farm operations is covered under the column research expenses.
Correct.
Okay. And marketing would be the same, whether it's for the, what I will call the tourist side, just for, and the production of turtle meat and the raising of turtles and the release of turtles are on the farm production. Okay? We agree on that? Okay.
Yes.
If you look at the personnel costs for the retail operations in 2018, it is $1,576,601, and in 2019 it is $2,261,251, an increase of about $684,650 or 43% increase. Agree?
Agree.
Okay. You look at the farm operation side now. In 2018, it was $1,341,830. In 2019, it's reduced to $933,743, or a reduction of $408,087, or a 30% reduction in personnel costs for the farm side. So out of the Deloitte restructuring and salary position, the tourist side got a gain of 40%, and the farm production side was reduced by 30%, based on the numbers here.
There are a number of factors that affect that.
Okay.
And it's not just the Deloitte study.
Okay, what are the other factors? Reduction in staff, or?
Some of it was a reduction in staff that were not replaced right away on the farm side, and the other part was really a focus on overtime, because overtime was an issue in 2018 and previous years, and
Okay.
we really focused on trying to have more efficient schedules on the farm side.
I think we were told earlier that we have somewhere close between 97 or 100 total employees.
Correct.
Okay. How many of those work with the tourist side, and how many work on the farm side?
I wouldn't know that number off the top of my head. It would be a guess right now. I'd have to go back, but I can submit that in writing.
Okay, that'll be fine. But suffice it to say that there are more people working on the retail side, the tourist side, than on the farm side.
Correct.
Okay. Can I draw your attention to a little lower down on the same page, 33, feed and operating expenses. Page 33 indicates that the feed for the retail side, which I assume is feed that you use to feed the various fishes, etc., in the lagoon, because that would not be part of the turtling exercise.
I would have to double check that, but I believe it's the actual turtle feed that they get from the farm to sell to the public in the bags to go feed the turtles in the breeding pond.
Because in 2019 it's a zero.
It wasn't accounted for in that manner, as far as I'm aware.
On the farm side, we have in 2018 feed of $605,833, and in 2019 $627,614. That's what the feed for the turtle farm costs.
Correct.
Okay. Now let's look at utilities. In 2018, utilities on the retail side was $339,114, and in 2019 it's the exact same figure, $339,114. There's an explanation for that, giving all of the fluctuations in fuel costs during those 2 years?
We have a number of meters from CUC, and each one, I think there's a total of 8 or 9 bills that we receive. They're all given on a spreadsheet and allocated because some of the meters feed on the retail side and they also feed the farm side. For example, there's one that we call admin. That meter feeds all the admin building from when you walk in, the retail store, but it also feeds part of the seaside pumps.
Okay.
So it's a percentage allocation based on the total overall bills.
All right, but the farm operation would only have 1 meter for the farm operation, turtle farm side.
Again, there's some that are standalone for certain parts of it, and there's some in combination with the retail side.
Okay. And the CEO told us last week that the tourist side has 20 pumps supplying the lagoon. And that the turtle side has 3 pumps. Can you explain why the farm side utilities is twice, almost 3 times what the retail side is, when the farm side only has 2 pumps and 1 meter?
It's, again, I'm not an expert in that field by any means. I only look at the number side, but from my understanding, there's the cost of actually pumping the water in. Yes, there's 21 pumps, or 20 or 21, that come in and feed the breeding pond, but they also supply all the turtle tanks in the back. So it's a 2 supply. It's 1 pipe that comes over, from my understanding. Okay,
how is the utilities allocated?
It's a percentage, again, based on each meter, based on the assessment that was done, from my understanding, because this was done before I got here, by the operations department of what percentage of electricity they felt was going to these particular sections as opposed to the farm side.
I just find it difficult to understand that the farm side can be consuming 3 times electricity that the tourist side is consuming.
It
So
also,
can we get a copy of each of the bills, and on that bill, can you note what is placed with each side when you submit them? In other words, this bill goes to the farm, this bill goes to the tourist section.
I can certainly do that. What time frame would you like?
Well, sometime before Friday.
I mean, what years? Sorry.
Only 2019. I'm only interested in 2019. 2018 and 2017, 16 is too far back. I can't do nothing about that.
Okay, and just a note that there's the aquatic life support system. That is considered on the farm side, so that is what brings all the water and the oxygen to keep all the turtles alive. So that's very intensive between that and the pumps with the electricity usage.
Why would you want to allocate the whole aquatic side, which is the whole reason that your tourist side operates, is because of the lagoon, whether it be for swimming or whether it be for watching fish, etc. And you're saying that you are counting that expense to the farm side, raising of turtle and selling turtle meat?
Not all of it, no. There's portion of each one that are for the retail side, and there's portions for the farm side. But I can get that breakdown as well.
I'm not making any accusations here, right? But I find it difficult to accept that the country is losing in 2019 $3.2 million on producing farm turtle and making $928,000 profit on the tourist side, but it's the tourist side on which that's what I want, not contributions. Look, soon senior movement here, just hold on a minute. Commissions, that commissions are based, and you're giving evidence that that is not the reason why these things are allocated over onto the farm side.
My understanding is that they're allocated based on usage, so meter usage. We actually now have a new aquatic life support system manager. He's also responsible for the fleet. He's been here since last February, so he's been working with CUC, and he gets real-time information. He watches this every 15 minutes.
Okay.
So now he has a better understanding of where the energy consumption is happening.
So you have hired a new aquatic expert,
Correct.
But he's on the retail side.
For this year, I'd have to go back and check to see how he will be allocated, because he was, he's fairly new. But traditionally, likely, and I don't want to speak that, I have to go back and actually check the number, so I don't want to speak anything until I actually go check to see where he was allocated.
Okay. But the reason he was hired was because you wanted to improve the aquatic side, which is the tourist attraction side, not the farm side.
No, the aquatic life support system supports both. So he's responsible for all those pumps. The 20 that comes across at the seaside, so he's responsible for the seaside function. When it comes across, the aquatic life support system, the oxygen, all of the quality of the water in all the turtle tanks, the lagoon. So it's all operations that are operated, anything that has water and a pumping system he's responsible for.
Okay. All right, this have the same issue with maintenance. Would you agree that the area for the tourist or retail side is much larger than the farm side?
In terms of size, I don't know the actual size, but the infrastructure based on regular maintenance is different type of infrastructure. So both are very maintenance intensive. Okay,
because we have a similar problem. 2018, the retail side maintenance was $229,773. In 2019, it went down by $79,000 to $150,060. But on the farm side, the maintenance is $709,066, which is, again, close to 3 times the retail side.
Again, I can go back and get the breakdown if you'd like for 2019.
Okay. All right. Your cost of sales in 2019 was $1.845759 million, $1,845,759. Your sales was $3,344,805, and your gross profit in that year was $1.12 million, 122,094. In 2018, your cost of sales was $1,460,301,000. Your sales was $4,225,345. Yet your profit on greater sales at lower cost of sales was less than it was the year before. Is there a rationale for that? And we're talking gross here, not after the expenses are taken out.
Again, we're really focusing on it started in 2019, but it's ongoing on focusing on the cost of goods sold, especially with F&B, being the margins so tight, retail, and admissions. On all sides, we're really looking at the cost of goods sales.
Yeah, okay, that's okay. But you would accept that if you had more sales at less cost, the gross profit should be more?
Theoretically, yes, it should be.
Okay. Now, if you go over to the turtle side, their cost of sales in 2018 was $348,828, and their sales in 2018 was $723,633, right? Which gave them a small profit, right? 200,000. In 2019, their sales, cost of sales, was $386,916. Their actual sales was $753,194. So on the turtle side, you can see that the sales, the cost of sales, and the actual sales, they're moving in tandem, right? For some reason, on the retail side, they seem to be out of whack somehow. Is there any explanation for that, or?
Again, I'd have to go back and get the history, but I do know there were some tours that were being introduced in 2018 that involved some expenditure that raised that cost of sales. So
Okay.
some of that is factored in there, and that didn't happen in 2019.
Again, one of the things that I found unusual about the utilities was that on the farm side, from 2018 to 2019, there was a $10,623 reduction, which is what all of us experienced because of the fuel factor. Yet on the retail side, it's the exact same figure.
Again, I'll address that when I supply the bills and the breakdown for that.
Okay. Now, if we go across the page a little further on the same page and we look at the personnel cost and admin, 2018 and 2019, we'll see a similar increase. The increase there was 213,210 or 16%. The personnel cost for research was 283,389 up to 500, or an increase of 84%. Is that because you hired more research people, or a result of the Deloitte restructuring, sorry?
We hired another vet, and we did add another position, which was the education programs officer.
Okay. And your vets are hired for research. They're not part of the animal husbandry that would be accorded on the turtle farm side.
They do both, and they're allocated in both sections.
So there are additional costs for these two people that are mixed into the turtle meat costs.
Again, it's a percentage breakdown. So a portion of their salary is on the farm, and then a portion is on the research, because they do both.
Okay, so what are they researching other than turtles?
There are a number of studies that are ongoing. Again, I don't get into that area, but I know that there's still a number of international studies that they're participating in from other countries. I know there was one recently during COVID in Australia and Israel.
I would hazard a guess that all of the international research is directly related to turtles, not to anything else.
Correct. I don't know if they're doing anything on the bird side. I know they've talked about some of the parrots, but I don't know if they've gotten into that.
And we have a similar situation with personnel costs and marketing, which went from 3,223 to 129,284, or 3,911%. That's again of adding staff.
Correct.
Okay. What is there a portion of that marketing cost that's also allocated to the turtle meat production?
No, it isn't.
Okay. So in all of this, the only section that got a reduction in personnel costs was the farm operation, which went down by some 30-odd%, right? Because of the Deloitte restructuring.
It went down, but not because of the Deloitte restructuring. Sorry.
So you're saying it went down because people left and positions are not filled?
Some people left, and there were a couple of positions not filled, as well as we really controlled overtime. That was the driving cost in 2018.
What about overtime on the retail side? No overtime problems on the retail side. All the overtime problems were on the farm.
We've really watched all the overtime, but the majority of it at 2018 was on the farm side.
Okay.
And they've reduced it, by the way, now to zero.
All right.
They've done fantastic.
Okay. Are you aware what was the reason for the overtime? Was it because they were doing stuff on the retail side in addition to the turtling side, or was it simply all overtime on the turtling side?
From my understanding, it was all from the turtling side due to scheduling and various issues of people being off on sick leave or not filling the positions right away, variety of factors.
Okay. One of the explanations given to us last week on the mistake that was made with the payment to senior personnel was that it was grounded in the salary policy. Can you point me to the section of the salary policy which created a mistake and what the misinterpretation was?
Certainly, and if you would allow me to give the history, it might give a little bit more of a context
Okay.
of how this all transpired and how it was resolved.
Yeah, I don't suggest you leave anything out. Yeah, go ahead.
Okay, so the relevant sections that were under the misunderstanding were 4.2.4 and 4.2.5 of our pay policy guide. Okay. Yeah, I didn't know if you wanted to look at the section first?
Yeah, let's look at 4.2.4.
Or do you want me to do the history first?
Well, give me the history and then we'll look at these in detail.
Okay, so in order to put this all in context, so I needed to go back and basically from when I started. So I started in January 2018. I was there for 9 days, and the person who was in the chief HR officer role resigned. So I then took on the role of the HR manager as well as the COO. A week after that is when the cash anomalies started, so I then took on the forensic audit, getting the RFP and getting that investigation started. Then in February, before I arrived, they had started with the Deloitte work in January 2017, and that was a steering committee made up of members of the board along with senior personnel and management personnel. By the time I got there in 2018, there were, I think, 3 phases that were completed. What was not completed was the proposed salary scale, the new salary scale, because when I arrived, the salary scale that was there is dated in 2015. So I was hired on the 2015 salary scale. So the work had commenced in 2017, so the salary scale that they had proposed was based on 2017 market data. That went before the board, and that new salary scale was approved in February 2018. So on that, so the very first course of action, of course, the board asked me to do a costing, to do a forecast of whether or not we could afford the adjustments as recommended under the Deloitte report. And they had done a number of, if you've received the reports, you'll see there were a number of positions that were over, a number of positions that were under, and some that were exactly on point with their market benchmark study. So I did a forecast based on the over-under presented to the board along with the salary scale. They took 3 days to review it. They came back at their regular meeting. They approved that salary scale. So then in March, the very first adjustment was looking at those ones that were over and under, and anyone that was under, meaning well, to go back up, we have a 7-grade salary scale now. So it goes from 1 to 7. So if you weren't on your right grade, so if you were grade 5 with the new salary scale, but the salary scale really said you should be on grade 6, those were the adjustments we did first. It just put people on the right grade, regardless of the points, because it was 7 grades, 8 points, or 13 points, sorry, at the time. So in March, there was an adjustment. So, and it wasn't just senior executives. There was 3 senior management, 3 executives who received it, and that was an average of 7.4% increase, again, to get them to the right grade. So then nothing else happened because, again, I was very busy with a lot of other things. Got the HR manager in August. October, we then resumed work with the Deloitte group again because the missing piece was our pay policy guide. So we signed I signed the consultancy agreement with Deloitte for the work specifically on the pay policy guide development. They provided a template. We've had myself, the HR manager, and the representative from Deloitte had several meetings. And the HR manager was tasked to then take their template and complete it to tailor it to our business. That work was completed in November 2018. And when we looked at the scale, what they had presented was 13 points across. And what we needed to do then is map each grade with a range of points that was allocated to all the positions from the job evaluation work that was done in 2017. So when we looked at the 13-point scale with the spread, we realized we couldn't afford it. So then we went to a 2018, or an 8-point scale, changed the ranges, and tailored it to what would suit our business. So the pay policy guide was completed, And that was presented to the board along with the change from a 13-point salary scale to an 8-point. The board approved that in November 2018 to be effective December 1st, 2018. So in December 2018, everybody, as long as they were over, or if their points had changed from the original position to their new, everybody had their same job description, then their points would just be mapped accordingly to the new scales. There was the job restructuring, or the organization structure happened at the exact same time. So, for example, the chief sales officer became the chief tours and customer experience officer. So there was some reorganization, not only at the top level, but there was some positions added lower below as well, such as like the education programs officer. So the December 1st implementation is when everybody, unless they were considered to be over the market at the time, then they were frozen, but everybody else had an adjustment in December of 2018. So it wasn't just senior management, this is across the board. And then at the same time, on December 12th, we were advised through our CO that the Cabinet and the Ministry had approved a 3.2% COLA increase. That was retroactive from July to November 2018, and it was embedded then into the new salary scales as effective December 1st, 2018. So it wasn't in addition, it was inclusive. So all of that work took place in 2018. So by the last payroll in 2018, all these adjustments were done. So everything went great. The HR manager put in a ton of work. She did a great job in writing the pay policy guide and doing the salary scales, and she did a ton of work and got this done. So everything was great in 2018. So then in 2019, hence where the misunderstanding took place. So all of these increases, the major increases again, were 2018. So in 2019, and for full disclosure, and I don't mind saying that because it's me, so I can disclose that it's me, I was one of the very first ones to get this increase based on the misunderstanding, along with another management position. So to put it in context, I left the island to go to my island in the North Atlantic for Christmas on December 18th, 2018. I came back to work on January 4th. On January 2nd, I was emailed a memo that said, "We are sending this memo to inform you that effective January 2nd, 2019, you have successfully completed 1 year with the Cayman Turtle Conservation Education Center, and as such has resulted in an increase in your annual earnings. This increase is in alignment with the approved pay policy guide that was implemented in 2018. And then on it goes. So, again, assuming, the only due diligence that I did was to go back and make sure that the salary recommendation form was filled out, and it was approved by the appropriate people, including the CEO. So when I looked at mine, the pay policy guide was just implemented December 1st, 2018. The HR manager had wrote it. She's a manager. I entrust my managers with carrying out their managerial functions. I had the salary recommendation form filled out correctly. I didn't, they did. So I didn't double check. So then I just assumed that this was part of the pay policy guide, and that's where I should have done my due diligence at that point. So this carried on for everybody who got an increase in 2019. And I do have the numbers. So in 2019, there were 8 crew members who received a one-step increase for their 1-year anniversary with the company, one of which was me. 6 of those 8 are still active. So they were hourly paid, and they were management, and they were executive, one executive, me. There were 2 crew members in 2019, sorry, did I get the right numbers? That's 2020, sorry. In 2019, there were 13 crew members, 11 of which were still active, received this increase in 2019. 1 crew member received a 10-year anniversary increase, which gave him a 2-step increase. And so he went up 2 points in the scale. There are 12 in total active crew members who received that increase. 9 had salary recommendation forms properly signed by all levels. 3 did not. So the financial impact to CTCEC for 2019 on these misunderstandings was $10,301 for the year, CI. In 2020, there were 8 crew members who received a one-step increase for their one-year anniversary. Again, all of us were going along, everybody, assuming this was correct. And out of those 8, there's still 6 active. Every single one of those 8 were hourly paid employees, and that increase ranged from 24 cents an hour to 47 cents an hour. There were 2 crew members in 2020 who received a 2-step increase because they had attained their 10-year anniversary. One of those was a senior executive and I don't want it for privacy reasons, but you can assume who that senior executive was, who joined the company 10 years ago in January 2010. So none of the people, unfortunately, in 2020 had the salary recommendation form filled out for them. None of them. So the financial impact as of today for all these people in 2020 is $11,806 CI. So the total impact of this month's understanding is $27,303 CI. So then we were going along, very busy of course, so on May 18th, and just for the record, we signed off the audits simultaneously 2018 and 2019. The Office of the Auditor General signed off those audits on May 14, 2020. May 18th, so this is 4 days later, when an increase came to my attention all of a sudden with a salary recommendation form. I signed it initially, and then I went, something's not right about this. Something was bugging me, and then there was another 10-year anniversary that came to my attention. So I actually had time then, the audits were completed, I went back and I read the pay policy guide. And that's when I realized there was a misunderstanding. Because that was meant to be upon implementation, one time, December 1st, 2018. It was not meant to be ongoing. So I brought it to the HR manager's attention. She thought she had done it correctly. I then brought it to the CEO's attention, asked him to review it. He did. He agreed with my interpretation. We then met with the HR manager on May 21st, and she still didn't agree that she thought what she was doing was correct. We then brought it to the board's attention because the CEO was included in here for a couple of months. We brought it to the board's attention in June. The board advised us to go to the Office of the Auditor General and seek their office advice. And of course, they were gracious enough to talk to us and just said, look, we can't advise you, but whatever you do has to be transparent, fully disclosed, and because it involves the CEO, we suggest that it also involve the board. And then we went to the board in July, all 3 levels, and by the way, the HR manager was also receipt of this mistake as well in 2019. So it involved the HR manager, it involved me, and it involved the CEO. And it was all through a misunderstanding. There was never any intention to hide this. There was never any intention to continue it. It was just I finally had a chance to do my due diligence and realized that it wasn't interpreted the way it should be.
Been stopped now, or is it still continuing the increase that they got?
Again, we have to go by good governance and chain of command, so the board presented their recommendation and gave a resolution that went back through the CEO to my attention. The CEO and I sat down with the HR manager, and this was the red circling option. We had, both the CEO and I, had both said from the beginning, we have no issue with paying this back, but we want to make sure the process is correct. So the proper process to get it remedied in the first place was the board. The board actually met yesterday. I still don't have the resolution in hand. I was only told verbally that they will be issuing a resolution to allow anybody who voluntarily wants to pay it back can pay it back. So I've already stated publicly, or not publicly, in the board meeting and to the CEO that I have full intentions of paying it back, starting with this payroll for December. The CEO also said he's also going to pay it back, starting this payroll. The HR manager also stated to me this morning that she has full intention of paying it back as well.
Okay, I have a couple of questions based on the historical fact. With 100 employees with a 1 year, why only 11 got the 1 year increment?
It was because, again, it was meant to be a one-time thing, so anyone who was with the company from 1 to 9 years got their one-step increase on December 1st, 2018. It was only anybody who joined the company after that fact and completed their one-year anniversary like I did, because I started January 2018, and then my one-year anniversary was January 2019. So that's why. So anybody from 1 to 9 years had a one-step increment adjustment, December 1st, 2018. Anyone who was there 10 years or more had a two-step increment increase as of December 1st, 2018.
Right, but that doesn't answer my question, because everybody who continued their employment from 2018 to 2019 would have been there for 1 year, should have gotten increment too.
They did get the increment on December 1st, 2018. That's why we were trying, that was the whole purpose of those two sections, was to recognize their seniority, for lack of a better word.
Okay, let's go back. I want to come back to that, but I think we need to get this thing about the pay policy ironed out first, right? 424 says, on the initial implementation of the pay policy guide, employees who have been with the company for 10 or more years will move 2 points automatically from their associated point to reward and acknowledge the longevity of the commitment to CTEC. Once their starting point is established after the 2-point jump, they will move along the scale in accordance with Section 438 as per their performance review, which allows for movement along the salary scale once a year in January of the following year until they reach the end of their salary band. Should there be any position or staff member who has already reached the end of their scale, they would not be further adjusted, as they will be rate circled and will be entitled only to COLA adjustments. So, when you say it was a one-time adjustment, it was a one-time adjustment to their salary scale, but the monthly, whatever that come out to be monthly, continued. It wasn't a one-time cash payment.
No, sorry. That's why when you read those first couple of words, upon implementation,
Right.
when I say one time, I meant they received that adjustment, either a two-step increase or a one-step increment at the point of implementation, which was December 1st, 2018.
Okay.
And of course, then whatever their salary was from that point on, it continued. The new adjusted salary obviously would continue.
So the person that got the 10-year 2 jump in 2019, that's the mistake. They shouldn't have gotten that.
It was a misunderstanding because they had already received the adjustment for being there from 1 to 9 years on December 1st, 2018. They were not supposed to get another increase because of their 10-year anniversary. That was the misunderstanding of the interpretation of that section you just read.
Okay. Did any employee in January 2018, having been there more than 10 years, get the 2-point jump down in the rank and file employees? Or this was only for executive staff?
This was for everybody,
Okay.
all levels.
So there would have been people, other employees, who would have gotten the 2-point jump in 2018 for being there more than 10 years?
Yes, as of December 1st, 2018, they would have received that increase for being there for more than 10 years. They would not have received anything else in 2019 or 2020, in addition to their adjustment in 2018.
Right. But the one that got it in 2019 did not have in 10 years when it was awarded in 2018.
Correct, which is why, so someone who had been there for 9 years as of December 1st, 2018, they would have had a 1-step increase because
Right.
they were there from 1 to 9 years. But then in 2020, when they received their 10 years, then they received a 2-increment increase with that misunderstanding.
But it took a year and more to find out the misunderstanding.
Again, it's just my first opportunity to go back and do my due diligence and read it again and really question it. Again, I guess that's part of my corporate snitch, if you want to call it a corporate snitch, is that I went back and actually questioned it and double-checked and said, okay, this is not quite right. So that was my first opportunity to do that. Should I have done it earlier? Absolutely. I
But
should have.
the CEO was also one of the beneficiaries of the 2 jump, and he didn't find it out either.
We were all under the same of understanding. Again, I read out my memo. I was one of the very first ones that I was given. So he assumed that the pay policy guide, as it was stated in the form, was being carried out correctly. Because again, that was being implemented at the manager level.
Okay. Section 1.1 of the pay policy in paragraph 2 says, the Human Resources Department is responsible for overseeing the implementation of the policy and for ensuring that the integrity of the policy is maintained. Then it says, this policy may be changed from time to time and thereby amended at the discretion of the Chief Executive Officer for individual documented and exceptional circumstances. How many times has the CEO changed this policy since it was implemented in 2018?
None that I'm aware of.
You keep referring to 1 stage, 2 stage, 3 stage. Can you explain to us how the Deloitte survey was? It seems that was implemented in 3 stages. Can you explain to us what each stage was, why that happened, and what was the amount that was awarded?
I don't have the actual figures for each stage of it, but the first stage was March 2018. Like I explained, it was to get anybody who was shown in the Deloitte report to be whoever was under to go to the right grade level. So that was adjustment number 1, just go on the right grade. So then and that was up to a maximum of 15%, because some of these, in order to get to the proper grade, it was over 20% increase for them to get to the grade, but we capped it at 15%. Again, I did a forecast. I felt, I'm conservative in my forecast, so I thought 15% was reasonable for an increase in March. And then I wanted to see how the company was performing financially, if we could afford it later in the year, which is why it was done in that way. So in March, it was done, but to a cap of 15% for whatever level in the organization was below their grade. So then the next one was November, and after the pay policy guide was approved by the board, the next adjustment was, again, to get people to the right grade, but to bring them all the way up. So instead of just capping them at 15%, if they needed to get a 30% increase to get them to the right grade, that adjustment was done then.
At the same time, the 1 year or 2 year implementation award would have taken place?
No.
Okay.
Nope, that's phase 2. So then phase 3 is when the December 1st implementation of the pay policy guide, and that's when the seniority came into play of your 1 to 9 years or your over 10 years, because in December, that is what determined what point along the grade you were in. So November was to get everybody on the right grade. December was to get everybody on the right point on that grade.
The Deloitte restructuring, people who moved into the grade, no account was given to the length of service. I.e., if I was in scale number 1, but I had in 3 years, I would normally expect it to not be at point 1, but to be somewhere along the scale. No length of service adjustment was done in phase 1.
The length of adjustment scale was in the pay policy guide, which was approved for implementation.
No, I accept that.
Yeah.
But I'm saying when Deloitte was doing their recommendations, right? If an employee was there for X number of years, was everybody brought back to the bottom of the scale? To the low point in each scale?
No, their exercise was to just show where our salary scale was in the market benchmark, and I believe they used the civil service as one of the benchmarking. They used a couple of attractions here, or I'm not sure what else they used. There were some things internationally they used as well.
Let me rephrase the question. when Deloitte done the benchmarking, right, and they established a scale for employee A, when that employee was placed in that benchmark scale, was their length of service accounted for to determine what point in that scale they were placed?
No, because they used, because it was completed by the time I got there, similar to the Hay methodology, it's the points awarded to the position. So their recommendations was all about making sure that all job evaluations were done, the points were assigned, and so for the first two phases, it was all about getting those positions on the scales, and then the third phase was then recognizing their years of service with the person. So the first two phases were position only. The third one is where their length of service came in, and it was with their position and then the person within their length of service.
So when you did your projection based on the Deloitte salary, no accounting was made for people being at different positions on that scale. You assume that the scale recommended by Deloitte was everybody would be at the bottom of that scale for that position.
For the exercise that I did back in March, it was based on the information that we had at the time, because the pay policy guide wasn't even started at that point. It was all about we were looking purely at the grades and the starting points.
But I seem to recall in reading the Deloitte report that at one point Deloitte was not willing to proceed with their evaluation unless there was a pay policy established. Is that correct?
I'm not sure. That must have been before I got here. I'm not sure on that one.
But you did give evidence a little while ago to say that you were one of the persons that worked with Deloitte to establish this pay scale and salary policy.
Correct. The report was already written. You know, they had done a full year's work in 2017. That's what I meant, sorry, to say that I wasn't involved in the work in 2017. The report was already given and had been reviewed by other members of CTC upon my arrival in 2018. I just continued with the work.
Okay. So go ahead and finish it. So the third phase then was, so the first phase, if I understood you right, was an evaluation of the position.
No, those phases were completed before I got here. So in 2017, when I say my phases, I'm only talking about the pay increases and the salary scale implementation. So that's my phases of those three. The Deloitte one, as you saw the reports, there was different phases of their work, which I know is confusing to talk about both, but they had completed that scope of work evaluating every single job position at the center and assigning them, they meaning the job evaluation committee that was trained by Deloitte, so they were all made up of all CTCEC people, that then assigned points for every single position in the center. Then those points had to be then put on a grade. Then those range of points then had to be allocated across the grade by points.
Okay. So you're saying that there was a salary increase in 2017?
No, there was no salary increase in 2017.
So the first salary increase in 2018 was based on the Deloitte recommendations as to the regrading of the position?
Correct. In 2018, in February, the board approved the new salary scale, again, because when, up to that point, the center was operating on a 2015 salary scale, so they adopted this salary scale, which was market data from 2017. So the board approved that salary scale in 2018, but it contained market data for 2017.
Okay. And then the second one was because you reviewed, you linked it back to the 2018 market data, which gave another increase.
No, sorry. No, it was everything we did was based on the data that was presented in 2017. 2018, the very first adjustment was to try to get everybody, no matter what level you were in the organization, up to the right grade. There were 7 grades, and like I explained, if they, their salary said they were grade 5, but their points for their position now said they should have been grade 6. So the very first adjustment, with a cap of 15%, to try to get them to the right grade, was in March. So
Okay,
it was
and
just
the
trying to
question
get
I was
the person
asking
to
was,
grade 6.
when you made that adjustment to put them in that grade, was any account given as to their length of service, or was everybody placed at the bottom of the grade?
Everybody was placed on the bottom of the grade.
Okay. And then the third reason was because the position classification and salary policy said that if you were there 1 to 9, you got 1 increment. If you were there 10 plus years, you got 2 points up the scale. So everybody was adjusted at that time for whatever position they should be based on their length of service.
Correct. That's the December 1st, third phase implementation of this. That all happened on December 1st.
2018. Okay. I'm more confused than when I started, but anyway, I'll try and sort it out before we make the report. So when you came in 2017?
No,
Right.
January 2nd, 2018.
Okay. The former CFO left when?
December 31st, 2017.
December 31st.
Correct.
But I think I saw some in the minutes that he left December the 15th so he could get his pension to take with him.
As far as I'm aware, he left December 31st.
Okay. And you took up your appointment in?
January 2nd, 2018. So
there was no period between him leaving and you taking over? Just a few days?
the one public holiday for New Year's Day, that's it.
Okay, all right. Can you confirm whether the CFO was retained in any advisory employment position after that?
Yes, he was given a consultancy agreement to complete the audit work for 2017 for 4 months.
But the audit was the audit completed?
No, it wasn't completed because of the cash anomalies and the purchase irregularities until December 2019.
And did those irregularities involve the former CFO?
I can't comment on any of that.
No, okay.
Sorry.
Huh? Yeah, so he got paid for 4 months consultant fees.
And he did work on the audit for
Okay,
those 4 months.
okay. To an end, Mr. Chris or anybody wants to take over?
Morning, Mr. Chairman, and through you to the witness. I noticed that there was, can you explain to me how the bonus system or the bonus process works at the Turtle Center?
Certainly, through you, Mr. Chair. From my understanding, this was started back in 2012, I believe, 11 or 12, I'm not sure. So this had been an ongoing program, and it's based on, it used to be quarterly performance appraisals, and when I came in 2018, I changed to semi-annually, and there's a number of competencies and a number of different things that are scored. The score you have to, normally, I think they were at a 50, so you have to score at least a 25 to be considered to get an incentive. And then the number of points was linked to a percentage of salary, and it was paid quarterly originally and then semi-annually for 2018 and 2019.
Thank you very much. When the chief officer, Strand, was here and I'd asked a question, he was under the impression that these were commission related with regards to like sales and everything else. And that appears, based on the breakdown that we have been given, that that is not the case. I noticed in 2018, no bonuses was paid. Is there a reason for that?
There is, because what is declared in the annual report, through you, Mr. Chair, sorry, and what was declared in the annual report is for senior executives only. And I guess I was trying to change the performance appraisals and tried to get it more geared towards KPIs and actual meeting targets. So we delayed the 2018 until almost at the end of 2019 because the 2017 audit had been completed. And so I wasn't comfortable with a clear picture of how the 2018 financial year looked and how the targets were looking. So we had to delay that until we're further into the 2017 audit and we had a better substantial handle on the 2018 numbers. And then we went ahead, everybody else got paid theirs for 2018 in 2018. The only ones that did not get paid were the executives. So we were delayed a full year, again, based on wanting to be, based on accountability and targets being met.
Okay, I am looking at the, I'm trying to understand, well, I see in 2019 where the incentives were paid to senior management. What was the difference between 2018 or 2019 that made that possible? What was the driving rationale behind it?
Again, there was none issued to the senior executives in 2018 for the reasons I just explained. The ones that are in the 2019 financials actually related to the 2018 fiscal year, but were paid in 2019. And we have not been paid for 2019 because we haven't completed that exercise. And likely, I don't know what the result will be.
All right, but so in essence, then no accrual was actually made for 2018 bonus payment at all for senior management.
No, we did not do an accrual at that time.
Okay, yeah, because it's kind of pretty much threw my analysis off because I was looking at the difference between 2018 and 2019 to determine what the driving factors were within the business itself that would have warranted it. But if the 2019 number is really for 2018, then I guess my analysis is completely off at this time. So that line of questioning has been shot down until we get, I guess, more greater details on those KPIs. With regards to cost of sales, just switching gears a bit, it's a large number, but I don't see anywhere in the annual reports where that number is actually broken down. What generally goes into the cost of sales line?
For retail, it would be all the merchandise that is paid for at the wholesale prices. So it goes into the system, of course, at the wholesale prices, and then that gets generated every time something is sold. So the cost of the actual buying that good versus the cost of selling it. So for the retail, it's just simply retail merchandise. And F&B, same thing, it's the cost of goods sold on all of the food and all of the beverages. And we do those separately and then do a combination at the end. Every month there's an inventory count done by food and for beverage, and then the cost of sales for both are calculated and we review them for any anomalies or any suggested improvements.
Okay. One of the things I noticed between 2018 and 2019 that dramatically improved the financial position of the Turtle Center was the actual reduction in the change in fair value of the biological assets. Just out of curiosity, and just I guess for the public, how is the value of that biological asset determined, and the change in fair value? How does that one come about?
This was something that it was a new learning curve for me because I have never valued a turtle before, and the auditors had never valued turtles before either. So there was a whole lot of discussions, especially with our new auditors, about which standard we needed to follow and which subsection. So it was, and ultimately we ended up going back to the standard that had always been used. I just was trying to get my head around it. But basically we value, even though we do different counts for the breeders, and the stock turtles, so stock being the ones that ultimately ends up going into production for consumption. They're all basically valued the same way, and it's treated as if it was a farm. Essentially, that's what it is. And then it's the weight of both types of turtles, the difference in the weight from year over year, the percentage yield that is the output from the meat that is produced, and based on the pounds that's sold. So there's a whole complicated formula that does it. But basically, if there's a reduction in either the breeder or the stock herd year over year, that's where you'll see the difference. So basically, I guess, for simplified terms, if there's a lot more weight, then you would expect it to be higher value. If there's less weight, again, through mortalities, then it would be a less value. But it is a very convoluted valuation.
The reason I asked that question is I looked at the financial performance between 2018 and 2019, and I noticed the net loss for 2018 was $7,557,592, and the net loss for 2019 was $7,016,768. So in essence, the losses between 2018 and 2019 went down by $540,824. But when I actually analyzed that number, I couldn't help but notice that $411,040, or 76% of the improvement, was actually as a result in changing the fair value of biological assets. And that's one of the things that kind of really jumped out. So in essence, 76% of the improvement, to some extent, of the bottom line is really based on the weight or the meat of the turtles, or whatever it is the livestock is. And I'm just curious, in terms of the KPIs and the measurement, in terms of paying bonus, is that something that is included or not included in the KPIs that is used?
It's not included.
Okay. So in essence, then the question is, if the performance is largely driven then, or the improvement year on year is driven by the weight of the or the value of the meat that is there, then the question is, what is really driving the reason behind bonuses being paid? Because I'm still wrapping my finger around an entity that loses over $7 million a year paying bonuses. I'm trying to understand what KPIs are the main drivers to determine a bonus.
Again, this structure was in place long before I arrived. It was, again, I think in late 2011 or 2012. Up until 2018, they were more on competencies based. So it was more on, your skills and your contribution rather than financial targets. It's only in 2018 that I began the process of working with the CEO to try to start at the top level to change that so that it's a mixture of competencies for what you would expect at a senior level, and also real valued targets of KPIs tied to financials and meeting the goals of certain projects being completed and those type of things. So we're still in, I guess, work in progress is the way I would put it, to try to transition solely from competencies based to more KPIs based. And we've done a lot of work in functional planning and 3-year strategic planning. All managers now have their functional plans, and every single functional plan has a number of KPIs of which they will be held accountable going forward for their performance appraisals. So it's still a work in progress.
This question is actually not directed to you, Mr. Chairman. Sorry, not to the witness, Mr. Chairman, but rather to the Auditor General. With regards to the Public Authorities Law, I mean, these kind of payments, these are the kind of payments that would also require to be approved by Cabinet?
Thank you. Through you, Mr. Chairman. The Public Authorities Law does talk to performance-related bonus incentive schemes being approved by Cabinet. I think the moot point is the actual wording of the law and the interpretation of that wording if there was a scheme in existence prior to the Public Authorities Law coming in. So my understanding through conversation with the chief executive was he felt the public authorities law didn't require him to get cabinet approval for the scheme because the scheme was already in existence since 2011.
That is something that we'll take up separately. This isn't the forum for that. That's fine. Thank you, Mr. Chairman.
Mr. Chairman, through you, will the employees get their vacation, sick and personal days back that they were forced to take during the shutdown?
Through you, Mr. Chair, can I have a time frame of?
During the pandemic,
Okay.
the employees were told they were forced to take personal days, sick leave, vacation, and various stuff. And looking at the government policy, as vague as it was, the intentions were very clear that this was not the case. Will they be getting any of this back?
Through you, Mr. Chair, I understand that the civil service treated it a little differently than we did, and we presented the 7 ways in which they could get paid. We did address this at an all-employee meeting, and the offer was made to all employees. We had high attendance, and that was only in October 14th. And we said anyone who still feels that they've gotten leave taken from them that shouldn't have been, to bring it to the HR manager, and we would address it on a case-by-case basis. So that offer was made over 2 months ago, well, a month and a half ago, and I'm not sure how many actually took her up on that offer, but we are clear, transparent. So if there's an anomaly, we will absolutely fix it.
Okay, Mr. Chairman, through you. Earlier on in the last sitting, you said that there's a steering committee of 6, I think it's 6 or 7 executives, 6 or so.
Through you, Mr. Chair, for which steering
For the
committee?
turtle farm.
Which
Yourself, the CEO, I think it's Hydes, Jackson, Walter, and someone else. I think that's a kind of a crew, kind of overseas. Is that the executive, or what do you call that crew?
Okay, our executive team?
Executive team.
So you're asking?
How big is that executive? 6, am I correct in saying it's 6?
Correct. There are 6 of us on the executive team.
Okay, and of the 6 executive, this pay mistake only got to 2 of the executive.
Correct. This
Okay.
misunderstanding that happened.
Misunderstanding, thank you. In 2018, hats off to you for quickly finding what was taking place with the IT. You got there in 2018, and by March, February, you said suggesting you'd identified something wasn't right, and it's in the hands over there now. That was 2 or 3 months of awesome work. Why did it take so long to find this mistake, in your opinion?
Through you, Mr. Chair, again, I have to be very cautious what I say because it's before the courts.
No, I'm not talking about the court. I'm talking about finding this mistake that we're here discussing.
Oh, I'm sorry. I thought you meant the IT.
No, that one over there, I said
Okay,
hats off
sorry.
for finding that so quickly.
Okay, sorry.
This one took a year and a bit to identify that we were wrong.
Again, it's getting the opportunity to go back and do my due diligence. For 2019, I was still spending a substantial amount of time with the Anti-Corruption Commission, working with them very closely with all these purchase irregularities, working with the auditors, trying to get the 2017 audit to completion. And then when we finally got that completed in 2019, we then worked on the 2018 and 2019 audits simultaneously, all done during the lockdown. Everything was completed from my couch, pretty much, in the living room, and with the other team members. That was concluded May 14th, and on May 18th is when I went back and did my due diligence, and I finally had a chance to lift my head and realized there was an error. or misunderstanding. It wasn't an error, it was a misunderstanding.
Make no sense. Go ahead, Chair.
Through you, Mr. Chairman, to the witness, has the internal audit unit been at the Turtle Centers yet?
The only interaction we've had with them is that they check on us on a quarterly basis about any senior management appointments. And we regularly correspond with them every quarter on that. But other than that, I'm not aware of any other.
Thank you. Mr. Chairman, and this is more something for the Auditor General and the Financial Secretary, and hopefully the Deputy Governor if he's listening or tuned in. Actually, today's Cabinet, so probably not. Recognizing that the financial statements that we're looking at is actually a financial audit, more geared towards material misstatements within the financial statements, and unless the auditors come across something. And considering that we have 2 active court cases going on with regards to the Turtle Center, which we can't get in, it is clear that there are definitely some processes issue and procedures issues within the Turtle Center. And I know some of them, I know we don't want to get into it publicly, but I must state for the record, I have deep concerns with regards to the governance model that is there. And I would really like for the powers that be, those that are charged with ensuring the governance of these SAGCs and everything else, to take a really deep look. I know this is one of the work that's actually also outsourced, that's done by an external auditor. But for either the internal audit office or the Auditor General office to go in and take a deep dive with regards to the processes and procedures, and also in particular with regards to the bonuses that are being paid. Now, I'm happy to see that they're more going KPI based as opposed to what was in the past. But what it says to me in the past is that it was a little bit too subjective, and those are where favoritism and all that kind of stuff comes in terms of who determines who gets what. And I would really like at least the Auditor General office at least to take a look at those payments in terms of the bonus payments for at least maybe 3 to 5 years, and also at the same time take a look at how costs are allocated between the different centers, so we can get a proper idea in terms of what the operation looks like. But we do have a board with not one single subcommittee, so that's some serious governance issues right there, and I really hate for it to be at this at the Public Accounts Committee. But I think in order for us to get a much clearer picture, there's clearly further work that needs to be done and further analysis that needs to be made outside of this. And I really feel bad for the witness, because as I've said before, she came to work for an organization that already had an history of a lot of different issues, and I do recognize that she's trying her best. But a lot of these issues are actually ingrained and almost cultural and historical that predates the witness, but clearly there's further work that needs to be done, because you can't have 2 active court cases here and HR issues being misunderstood and not believe that there's definitely something wrong inside the organization, that or at least I shouldn't say something wrong, but definitely something that requires further work and further analysis. And I really would like for the Auditor General to start looking at probably bringing some of this work back in-house, where we can start taking a deeper look. But you can't have an organization losing over $7 million a year subsidized by the public, one that is needed by the public, because I think we've already made it clear that I think just about every member in this house would support the Turtle Center being where it is, because it is an invaluable tool within our tourism industry. But at the end of the day, there's clearly governance issues here and clearly weaknesses in process and system that needs to be looked at much deeper. Because at the end of the day, this is the only way for this area to have any value.
We'll make that recommendation in the admin meeting, probably. You were finished, Mr. Burney?
HR does answer to you.
Yes, HR is one of the departments for which I have oversight.
Thank you.
Getting back to page 33 of note 19, right? and the evidence you have given is that they, and what is represented here in these numbers, is that the resort retail section of the Cayman Turtle Conservation and Education Center made a profit of $928,712 in 2019, but the production of turtle meat lost $3,276,849 on a sale of turtle meat of $753,000.
That is what is presented, yes.
Okay. Would it be your recommendation then that the government close down the turtle meat side and just rely on the resort if all of the accounting that should, all of the costs that should be allocated to the resort side is being done, and we're still making a profit of $928,000, and the costs that should be to the farm production is equally correct, and we're losing $3.2 million?
Sorry, your question is, what is my recommendation?
Yeah.
Again, it's not my place to do that, but my understanding is that we do this for a conservation effort only is the major reason. It's obviously not something that we're going to have profit from, but it's definitely a conservation effort so that there's no poachers and they're not taking turtles from the wild. So that's my understanding of why we do what we do.
And you think that's worth a loss of $3 million a year?
It's not my place to comment on that.
Okay.
Sorry.
Okay. Earlier, I just want to make sure I understood you correctly. You gave evidence, as I understood it, that at a board meeting last night, it was resolved that all of the employees who got the mistaken increase must pay the money back.
Again, I have not seen the written resolution. I can confirm there was a board meeting yesterday, and I was verbally told that the resolution will contain wording something along the lines of they can voluntarily pay it back. And we will work with every crew member who was affected. There were 20 in total, and 3 of which was myself, the HR manager, and the CEO, and we've already declared that we're paying it back, so now we're down to 17.
Okay, well,
So we will work with those 17 to see if they want to as
no,
well.
but I mean, I don't understand the volunteer side of it. I mean, is that the proposal that was given to the board?
I don't know. Again, I don't have the resolution, so I can't comment to it. So
Okay.
I've just declared that I will be paying it back, but I don't know because I don't have the resolution in writing, so I can't comment.
But the question I'm asking is, you're paying it back is in agreement with the board resolution, or did that prompt the board resolution to make it voluntary?
I was always willing to pay it back, but again, I believe in due course and chain of command and proper governance. So because the board issued the directive, it was felt, in my opinion, that we needed to then wait for another different directive or resolution from the government, from the board to be brought back down. So again, I felt I was out, if I did it any other way, it would be outside of the proper chain of command and good governance.
But that's a 180 by management, because evidence provided last week by the board chairman and by the chief officer and his deputy suggested that the executive, meaning the CEO, went to great lengths to convince the board not to ask for the money back, because the legal advice that you got from the Attorney General, that was the first thing suggested by the Attorney General's office, when it said you couldn't take it back without their permission. But it didn't appear from evidence that we received last week that any effort was made to ask the employers, including you, whether you would pay it back or not. The decision was made, and the board took a decision based on presentations by the CEO not to ask that it be given back or voluntarily, but that it be rate circled, and they had some formula of when you catch up sometime between 10 or 15 years from now, but you would continue to receive it all that period in between. So it is very interesting that the board has done a 180, and one wonders what prompted that 180, the decision.
Again, the board makes its own decisions based on their discussions, and it's there, at the end of the day, they are the ones that have to vote on it and make the resolution.
Yeah.
That's 2 steps below me. Again, I just followed
Okay.
the directive that is given, and then there was another directive that is assumedly coming in writing, so I will follow that
Okay.
directive as well.
But the evidence given last week by the board chairman, by the chief officer, by the CEO was that the board was not going to ask for the money back based on the presentations and lobbying from the CEO, but they had accepted the rate circling of those employees on a formula that they would not accept further increases until it was equated, and then they would start paying it back at the time that it was fully equated. So I guess, Madam Clerk, can you write the chairman of the board and ask him for a copy of the resolution of the board last night indicating the change of heart and the 180 in the decision process? Expecting you to answer that. That's just, we'll get the results. Okay.
The only comment I will add is that the board made their decision from my observations based on the legal opinion that was given by the Attorney General. And it was a healthy debate.
No, that was not.
Again, that's
No,
just
no,
from my perspective.
I don't want to get in trouble because that was not the evidence that was given to us.
Okay, I'm just saying from my perspective only.
Okay, but the evidence that we got from the board chairman and from the chief officer was that the chief officers had to insist, one, that you get the legal advice, right, which I hope is recorded in the minutes when they come forward, and secondly, that it did not follow the Auditor General, the Attorney General's advice, but it took the CEO, what the CEO represented to them as a solution to the problem, which did not involve the recommendation, the advice of the Attorney General as contained in his analysis point 10, right? In these circumstances, there is no ability to simply reduce the employee's level of pay without their consent, as to do so would be a breach of 47.5 unless an adjustment was required for the reasons set out in 74.6. I think they're talking about 47.6. I think they're talking about the Public Authorities Law. Yes. Right. So the first analysis was by the Attorney General was that you could take the pay back with their consent, but that was not something that the CEO approached the staff to do, nor did he make that presentation to the board. His presentation to the board was all centered around the employees keeping their pay increase and continuing to get the pay increase until sometime in the future when it could be equated because other people got salary advances than them, right? Then the 3 conditions in point 15, while we have commented above on the proposed remedies, there is not one correct legal outcome in these circumstances. The emphasis when determining the remedies should be on making a rational decision, which will include consideration of A, adhering as closely to the policy as possible, transparency in the process, treating employees in the same circumstances the same, and in this case, maintaining internal relativity and financial implications for CTCEC. As the person responsible for HR, has there been transparency? Has the other members of staff who have not received this mistaken increase in pay been so informed and explained as to why it happened and what happened?
Thank you for the question. Again, after the board gave that initial directive or resolution in October, myself and the CEO did sit with the HR manager, as I explained, and the first process is to actually sit with the 17 that were affected. So I don't think she's fully completed that yet. She's done a majority of them, from my understanding. So we couldn't actually go to the rest of our crew members to tell them until we actually sat and with the ones that were affected by the misunderstanding. So that's the process. So we're at step 1 yet.
Okay. Any other questions? If not, thank you very much for your time, and we reserve the right to recall you if we need to. Thank you very much.
Thank you for the opportunity to come back and hopefully clear the air on these issues.
Okay. The meeting is suspended for 10 minutes. In the witness, Ms. Yantel McGaw, Human Resource Manager for the Cayman Turtle Conservation and Education Center.
I do solemnly, sincerely, and truly declare and affirm that the evidence I shall give to this honorable legislative assembly shall be the truth, the whole truth, and nothing but the truth. Thank you.
Good morning, Ms. McGaw, and thank you for coming to attend the Public Accounts Committee meeting. As you will have been made aware, we are dealing with the annual reports of the Cayman Turtle Conservation Education Center Limited for the years 2017, 2018, and 2019. The rules are that when you answer the first question, you state your full name and your position, just for the records of the Hansards. So you are the HR manager for the Cayman Islands Turtle Farm and Education Center.
Good morning. Yes, I am Yantel McGaw, the Human Resources Manager for the Cayman Turtle Center.
Okay. You and I know it as Turtle Farm, so don't be too worried about whether the public knows it as a Turtle Farm too. And you report directly to the COO, Ms. Peg Hamilton at the center.
That is correct.
Okay. The reason why we called you is because there seems to be some, I think the CEO and the COO described it as a mistake where some members of staff got a salary increase and received it for over a year in some cases, but they were not aware that they had gotten a salary increase, or when it came to light, when it was discovered, they seemed to say it was a mistake. And while they haven't, well, I think this morning they did say that it was you, the HR manager, who made the mistake in your interpretation of a particular section of the position classification and salary policy. Can you take us through what happened and any documentary evidence that you may have, you may wish to give us? We'll be happy to receive it to substantiate your position that you're taking. So can you kind of take us through what happened and why it happened?
Yes, I have a timeline of events that I've prepared for this meeting, starting from my start date at the company, and hopefully that will answer the question. Upon joining the company on August 6, 2018, I was given a copy of the CTC Final Report Draft Version 4 PDF document that was produced by Deloitte from my COO. And on August 7, 2018, I was given the Pay Policy Guide template that was supplied by Deloitte from my COO. My task was to create the pay policy guide for the company using the template provided and develop pay scales for the company, positioning each position in the respective grades and pay table point on the scales based on the job description scores that were awarded to each position. I worked with Deloitte, the COO, and the COO when developing both the pay policy guide and the pay scales in advance of the presentation of documents to the Cayman Turtle Center Board of Directors on November 21st, 2018. The final inputs on this document were given by Deloitte on October 31st, 2018, and the final inputs from the COO were given on November 18th, 2018, before sending the documents to the Board Secretary for distribution and the Board of Directors. The COO also provided input on the presentation slides I had designed for the PowerPoint presentation to the Board of Directors on November 21st, 2018. This is to show that I worked very closely with our consultant Deloitte and our COO before these documents went to the Board of Directors and verbally with the CEO. Having completed my presentation on November 21st, 2018, from which I was assisted by the CEO and COO in the board meeting with follow-up questions and comments, the board approved both the PPG, or the pay policy guide, and the new pay scales for implementation. On November 21st, 2018, I distributed the pay policy guide to all managers and made them aware of the approval of the document. I also later informed them of a manager's information session that would be held on December 7th to train and walk them through the document and the pay scales for their respective departments. A member of the HR department was then tasked with creating a spreadsheet for all crew members to put them on the correct grade and point based on two factors. Based on the first one being the number of points that position was given for their role based on the job evaluation committee, and to factor in the tenure of that specific employee, who would receive an additional 1 point jump on the pay scale if they were with the company for 1 to 9 years. And for employees who are with the company 10 or more years would receive an additional 2 point jump from their starting point on the pay scale. This spreadsheet was sent to the COO, which include employee names, their titles, their years of service, based on hire date, their current salary, their current grade, point position on that grade, their new annual salary, based on the dual process mentioned, and the difference between the two for all staff members.
Stop there a little bit, please.
Sure.
You're saying that the document that you presented to the COO after you were tasked with filling out the Deloitte recommendations and salary allocations were based on two things: the points that Deloitte awarded to each position and the tenure of the employee. That's correct?
Correct.
Okay. Because I think we just received evidence that the second part of that was not done at that stage, but okay. Continue. Sorry to interrupt you.
That's okay. All grade adjustments were made for crew members on November 2018, and on December 1st, 2018, all crew members were placed on their correct pay table point, and that grade based on the number of points awarded to the position and the tenure of employees. Memos were sent to every member signed by the HR manager informing them of the reason for the increase, the number of points awarded for their position, the nominal figure of the increase, and what their new salary was going to be and when to expect it in the upcoming payroll. 48 crew members received an additional 1 point increase having been with the company between 1 to 9 years as per section 4.2.5 of the pay policy guide. And 36 crew members received an additional 2 points from the starting point of the pay table point of their respective grades based on section 4.2.4 of the pay policy guide for crew members who had been with the company 10 or more years. The remaining staff members were given increases solely based on the number of points or awarded for their respective positions because they did not qualify for the additional 1 point or 2 point increases due to the lack of tenure for those employees. That was the process that was followed for 2018. For 2019, salary increases were given to staff for tenure, whether that was a 1-year anniversary with the company or a 10-year anniversary with the company, based on the understanding of Section 4.2.4 and 4.2.5 of the Pay Policy Guide. 14 anniversary salary increases were given in 2019, 9 of which have additional supporting documentation attached, namely a salary recommendation form with signatures from the CEO and the COO, and line managers and the HR manager. The salary recommendation form for this section is not required. It is not stated in the Pay Policy Guide as something that needed to have been done for these anniversary increases. But these were done by a previous member of the HR team as an extra measure. And thankfully we have it for support. From HR's understanding of the Pay Policy Guide at that time, and following along with the understanding from the CEO and COO, hence their signatures on the salary recommendation forms,
Again, sorry to interrupt you, but you got, I'm way up in age, so I need to ask these questions. When you're saying that the CEO and the COO both signed off on the 10-year increases in salary for 2019?
Yes, there were 14 that were given, and 9 of which have salary recommendation forms that were signed by the CEO and COO.
Okay.
Along with line managers. From the HR's understanding of the Pay Policy Guide at that time, and following along with the understanding of the signatures on the salary recommendation form, is that Section 4.2.4 and 4.2.5 were part of the initial implementation of the Pay Policy Guide, due to this being the initial Pay Policy Guide, and the effective date on this document is January 2019, until a review in November 2019. On November 3rd, 2019, HR was of the understanding that the implementation of the Pay Policy Guide had been completed, because the year had finished and it was now approaching the 1-year anniversary date of the Pay Policy Guide document. The salary increases given to staff were now to transition to Section 4.2.8 of the Pay Policy Guide, whereby salary increases would only be given based on the qualifying performance reviews of individual staff members. The HR department prepared and sent a cost analysis spreadsheet to the COO for salary increases for 2020 based on Section 4.2.8, which is the performance review increases. The cost analysis that was done by the HR department in November 2019 did not originally include any anniversary increases for 2020. This was also sent to the finance manager, and the HR department was instructed by the COO to include anniversary jumps on the cost analysis for 2020 via her email response on December 13, 2019.
Beg your pardon again. You're saying that you did not include the 10-year increments in your original analysis, but you received email instructions from the COO to include them?
Correct.
Okay. You have copies of that email you could let us have?
Yes.
Okay. You don't have to do it now. At the end, you can give us it. Okay.
Okay.
Wow.
Having received this directive from the COO to include the anniversary jumps for 2020, HR reread the Pay Policy Guide and adopted a new interpretation based on this directive from the COO, that it was to our understanding that the 10-year and 1-year salary increases were rolling benefits. That would continue for staff who qualified and would justify the directive given by the COO. It would also continue the 1-point differential between a new hire and someone who had joined a year ago for proportionality. At the time, the logic to the directive given by the COO made sense, and we followed that directive given and sent the cost analysis to the COO with the anniversary jumps for both 1-year and 10-year anniversaries, of which included and named one of the chief officers. This was a spreadsheet that the HR department worked from, having obtained this information from the pay scales, and it included It included the name of the employees, the number of years anniversary, the anniversary date, the current salary, the anniversary salary, the difference in the salary, any notes and respective totals. As per standard, staff received their memos regarding their salary increases based on the applied sections and understanding of 4.2.4 and 4.2.5 of the pay policy guide, having been asked to include the anniversary jumps in 2020 by the COO.
Okay, just, again, not sorry to interrupt you, but you're saying salary individuals who got those increments received specific notification thereof, and that would have included the CEO and the COO. They would have gotten that notification that they were getting a 10-year increase in their pay.
The memos that were sent to each individual crew member was sent to that person, and in most cases, the email would only contain myself on that signature, in that email. The COO was aware of the anniversary increases in the cost analysis spreadsheet that had been sent in December 2019.
I'm asking is, did the CEO and the COO get notification from you that they were getting 10-year increases in 2020?
I have, if I may, I have some salary increases in 2020 showing that the COO was aware that these were being given. There was a salary increase given in February to one of the respective crew members, of which the COO was on in terms of a response to the email, and it was titled salary increase. I also have, sorry. I also have two memos that were signed by the COO herself in March 2020 for two separate crew members to give these anniversary increases, and that was in March 2020. And in April 2020, I have another email directive from the CEO confirming, it's in response to another matter, but it includes, and I quote, "The 1-year anniversary jumps are fine, you can go ahead with for crew member X and crew member Y."
That was from the Chief Executive Officer?
No, that was from the Chief Operating Officer.
Chief Operating Officer. The Chief Executive Officer got the 2-year 10-year increment in 2019 or 2020?
You said the 10-year increase?
Yeah.
I'm not sure if he would consider that personal information.
No, they told us already, so you're going to ask you.
He got his increase in 2020.
2020, okay. Yeah. The reason I asked that is because the indication, evidence given by them earlier, was that he may have gotten it a year in advance. If he got it in 2019, he would not yet have had in the 10 years to get it. But you correcting that now, said he got it in 2020, so he would have had it in the 10 years.
Correct.
Okay, thank you.
Mr. Chairman, through you. Oh.
Yes.
Okay, through you, Mr. Chair, you've already said that the pay policy guide got signed off, and other people have said that sitting here from everyone, the CEO, the COO, and the board all got that off. Now, just to let you know, both the chairman and the CEO said you're an outstanding young lady and you're good at your job. So that's not in any question. You also know you took the oath, which you have to tell the truth. So you protected all around. I'm not even going to ask your opinions, but you got approvals from everyone above you to go ahead with this. with the pay raises and for 10 year, 1 year, etc., all those stuff. Everyone above you approved it as you, because it was your opinion, it was their opinion, but at the end of the day, whatever you put to them, and you and the CEO, the COO has clearly stated on 2 occasions that HR answers directly to her. So all the stuff that you did went to her and they approved it.
I mostly took instructions from her and worked with her from the inception.
Beautiful. So when they said they didn't understand, well, didn't understand themselves. How many Caymanians have been, whichever way you want to put it, fired, released, or quit in the last 2 years?
You're asking for 2018, 2019?
Up till now, what you have on your file.
In 2018, we had 17 Caymanians / Cayman status or RERC holders who left the company. In 2019, we had 20 Caymanians / Cayman status or RERC holders. And up until now, for 2020 so far, we have 13 Caymanians / Cayman status or RERC holders.
Thank you. Would you happen to have the breakdown of release / fired versus resigning? And if you don't have it now, you can get it another time.
I do.
Okay, what's the figures, please, for released or fired versus resigning?
For all 3 years?
Yes, please.
For 2018, 10 of the crew members who left the company were, 9 were terminated, and 1 left due to job abandonment. Due
to what?
Job abandonment.
Uh-huh.
The remaining 10 were voluntary resignations.
2019. That don't add up.
In 2019, 11 crew members were involuntarily terminated from the company. I apologize, 10, and 1 was made redundant. Eight of whom resigned voluntarily.
Okay.
And 2 left on job abandonment.
And 2020 so far?
Three were terminated in 2020, and 12 were voluntary resignations.
Do you all ever do job exit interviews?
We do.
Okay. Mr. Chairman, through you. The famous or infamous, whichever way you put it, Red Seal certificate. When did you first decide to put this, or who decided to put this on the job description? Okay. Because I knew the first chef that was there was from Jamaica, the second chef was Scottish, and both their job descriptions that I have in my bag did not have a Red Seal, and all of a sudden the Red Seal certificate showed up. Why, and this is something that's only pertinent to Canada, why is it all of a sudden pertinent to us, and who put it on there, or who decided to put it on there?
The head chef role was first advertised in 2018 in the Cayman Compass, and it did not request a Red Seal certificate to be on there. Upon our head chef who was in the role at the time leaving. When the recruitment request form was being filled out, I have an email here from the COO stating, and I quote, "Perhaps it should follow with some of the examples of the accreditation that we are looking for, such as Red Seal or UK1 that is needed, etc." The line manager then went ahead with that wording and included it on the job advert for 2019.
And the present chef is from which country? That's one of the work permits. Which country?
I'm not sure if that would be considered personal information,
Okay.
but I'm happy to
No problem.
put it in writing.
I don't know what it is, but I just want the public to know. Thank you. And last but not least, who made the decision to change the job description to fit? No, it was actually what happened, Mr. Chairman, through you, was an individual was secured or interviewed. His permanent residence said this, and then they changed the job description to specify, to fit him, instead of him fitting there. Who made those decisions?
Are we speaking about the head chef role?
No, the initials for the employees, the first initial is D. I'm not going to call the people's name. I don't think the head chef has, it was the PR or whatever. It's more of a party manager. I forget what the position is called. But I do know that the individual, that the permanent residence that's on his form did not fit what was in the job. And the job was changed so his could fit in there so he could get the job. Who made that decision? Or where did you get instructions from? Or you'd have to look that up.
I would have to look that up.
Okay. Mr. Chairman, that's all, because it's already been identified and said that nothing of this sort of thing took place. And this is 2 cases where it did take place. Yeah. Thank you very much, ma'am.
Sorry. Thank you, Mr. Chairman. Through you to the witness, I just want to expand on the point that my colleague from West Bay North had raised with regards to the qualification or the change in requirements for the head chef with regards to, you said the Red Seal?
Red Seal.
Yeah, sorry. Just for my own clarification, when did that job description change, and what was the rationale for changing requirements or the qualifications for that particular job? What was the reason given?
The person, the CEO who had suggested the Red Seal to be added to the job advert, or other closely following ones, she did not give a reason as to why these should be included. She just stated that perhaps some following examples should be included. In the first part of the sentence, it reads, and I quote, "I am not sure if the professional trade accreditation is clear enough in the job ad." And then it followed with, "Perhaps it should follow with some examples of the accreditation that we are looking for, such as the Red Seal or UK1 that is needed." I'm not able to comment on what her reasoning was.
Prior to, how many applicants did we have for that position? Roughly, ballpark.
Ballpark, I might have been 7.
And of that 7, how many would have been Caymanians?
We had no Caymanians apply, only one RERC holder.
One RERC. And RERC was basically married to Caymanian, and they were, is it just why weren't they considered?
That person was interviewed for the role, but was not successful in the interview phase.
So it was just an interview, the person fell down, and not specifically on the requirements or the qualifications?
Correct.
Okay.
It has been banded back and forth through you, Mr. Chair, about what's right, what's wrong. And we've been told that the staff were told they could come in. And I will ask you again, I will ask you for the first time, will the employees get their vacations, sick, and personal days back that they were forced to take during the pandemic lockdown? And is it too late for them to come in and talk to you and say that they want them back? The CEO said they were given an option, and it seems that quite a few people didn't hear that, but now that they've heard it, will they still be given the option to come in and discuss it with you about getting their days and their times and so forth back?
Yes, we did discuss this pain for quite a few of our crew members at an all-staff meeting in October, and the CEO did state in response to this that if they wanted to, they could come and see me, and we can reconcile their allowances during the pandemic to see or discuss on a case-by-case basis what needed to be given back to each crew member. I've not had any crew members come to me so far since the all-staff meeting about reconciling their vacation time. If they come in, it'll be looked at on a case-by-case basis.
If there are no more questions, yeah.
I just want to, Mr. Chairman, through you to the witness, I just want to say that your presentation and your professionalism here today did not miss this committee, and I just want to commend you on a job and everything well done.
And I would add to that if there's any pressure attempt made to in any way punish you for anything you have given to this committee today, please let us know, because that is something that the committee will not look kindly on, because I agree that your answers have been very forthright, they've been very professional. You obviously have the documentation to support them, and for that we congratulate you on a job well done. And it is good to see young Caymanians like you taking up these roles and performing to this height. So thank you very much, and have a good weekend. Yeah, you can give to the page the documentation that we ask you for, the emails and other stuff before you leave, please. The committee is adjourned. Sign the deal.